Welcome, it's the Crypto Sniper, and coming at you on the crypto market, starting with Bitcoin. Yes, what is the big B going to do? We're also going to talk about a less outperforming type token, that is our friend Solana, which still has a bit more downside. Oh dear, they seem to get involved in all the wrong kind of things. Many an ADA fan enjoying that with some glee. Hey, let's not talk about the tribalism of crypto. Let's get straight in and have a look at what Bitcoin is going to do. Okay, so here we got Bitcoin USD, and I want to highlight something that's kind of foundational. Generally, periods of low volatility are underlyingly bullish. So I've put a pink box, transgender pink, buy the Crocs in that color, be cool, turbo cool every time, watch the chicks fall at your feet. Low volatility in the pink box. Ooh, yes, a little bit of jiggy in the pink box, very, very minor, is generally bullish. It's not exclusively bullish. You can get periods before major data releases where you get exceedingly low volatility and you get a spill. So if we were to get an outbreak of news and Trump comes out and says, actually reconsidering Bitcoin is not considered an asset, gold is, or something like that, that could be seen as particularly negative for this. And you could have had this low volatility if the market was expecting an announcement and it didn't come out as planned. You can get a spiller, an absolute thriller, and you can smash it down. Many folks will be thinking, well, 3 bumps in the road. And you tend to, when all you know is a head and shoulders, it's a bit like if all you have is a nutcracker, everything becomes a nut. So you'll have a lot of people that will go head and shoulders, left shoulder, higher head, and you're here and you're waiting for a rally. Now, it can be that. It's not to say it doesn't, because they do indeed happen. I'd just argue that the very low volatility at what we'd describe as the armpit 2, that's the second point here, is inherently bullish. And more importantly, the dollar has been a little bit a part of the story. The dollar has been part of the story. So we need to do a little sidebar before we continue our analysis on Bitcoin. Take a little walk on the FX side with me while we discuss the crazy politics at the moment. Tariffs this and tariffs that. You see, what's happened is suddenly America realized, unfortunately Britain never realized, and Europe is in the point of forgetting, that having manufacturing is still a core fulcrum element to a nation. Being able to build some of your own stuff that you need rather than having external sources of supply, especially if some of them may be perceived as enemies and are doing it in great scale that you have no other option to buy from them because they have cost advantage, labor advantage, and everything else. Having some ability to manufacture on your own soil, meaningful, everyday used products and services, etc., particularly physical products that require skill sets, big commitment in plant. Putting the workshop entirely into the globalization game and saying, never mind, we buy from the lowest cost denominator, makes you vulnerable, particularly in times like these as you'll be getting this level of bifurcation. So what's actually happening is, as the USTs have lost an immense amount of value. In fact, we have record shorts now on TLT. By the way, we put the short on TLT in 2020. That's right. 3 years later, we hear about Stanley Druckenmiller and Paul Tudor Jones now admitting that they are short on long bonds as well. Now, it's become such a crowded trade to be short the bonds that maybe they deflate the debt. You are in a debt-based crisis, by the way. Never forget that. A collapse, a controlled demolition of intent and plan. And that is why, small politics, Trump is running around saying, hey, Russia, China, let's spend 50% less on our defense. Well, the reason why he wants that is because he has to spend less and he doesn't want to be usurped by them. So he wants to try get them to agree to do it too. It's not that he's suddenly become a big peacenik. He wasn't a great peacenik. He was quite aggressive towards China in 2016. Not saying if it's a good or a bad thing. Not trying to provoke anybody here who's into the political thing and thinks he's going to vote himself freedom. But generally, there's a debt-based collapse. They've been joking, tweeting, posting about the collapse, elongated muskiness, Trumpy Drumpf. And Of course, Yellen said in passing as she left, saying, well, you're going to have to engage emergency measures now as we reach this point. So in short, America doesn't have the discretionary income to spend anymore. So what could happen, having seen the bond market already collapse immensely since 2020 from an all-time high by well past 40%, going on 50% at the current moment, go and check the TLT chart for that, is that they might need the dollar now to take some of the pain and soften, because there's two ways you devalue the debt. Its absolute value goes down, ergo rates go up. Not a very popular thing in this environment for all those in real estate, commercial property, etc. Rate hikes so that you can compress the value of that debt, as Volcker did on the value of the debt after the Vietnam War, after the military-industrial complex had absolutely loaded up high on the hog, and they dropped bombs all over jungles for no main cause, apart from enriching the legacy family classes and the military-industrial complex and all the bungs and the brown envelopes that go with those sordid gang of crooks. Of course, post-CV19, we had our own version of that in the pharmaceutical industrial complex, which also involved crooks. And you've seen it again with Ukraine and the Democratic Party. So what are we talking about? We're talking about the possibility that the dollar could be weak. The dollar could actually be weak. So if we go and take a step back and have a look, how is the dollar looking before we come back to Bitcoin? So we clean our face up and we call, by the way, we haven't been a dollar weakerless guy. We are actually long run expecting a dollar spike on interest rate contagion as that debt collapses under control. So eventually the oversized shorts on TLT will potentially be right, as we were when we said it in 2020. But things don't go down in straight lines, and they may get a rally, and it may be the dollar that gives. So we called a double top on the euro strength at 120, and that double top ran its target. It then set up a head and shoulders. So let's show you this. So we've not been bad on the currencies. There's the double top. There's the target make, which gave you the right shoulder of a head and shoulder, which of course made target on a wick. Absolutely superb exit there. Rallied into a flag, which of course sold off. Now, where are you now? Double top performed, check. Head and shoulder performed, check. You're down at these levels, and you have the blue line that I've drawn for you. Let's do it in blue so that we don't confuse the people. We're doing another magnificent Picasso of immense value. This should be sold on the street arts for thousands, hundreds of thousands, millions. W, bottom, potential, and you've had a little dip right shoulder there. You kind of had a little dip one here, and in fact you had a little dip below our neckline. The necklines are in the light blue over there, so you could argue, yeah, there's a little bit maybe of a tiny shoulder in there too, but it's a W bottom, and the W bottom takes you up to 108. And you're around 104s at the moment. Now that's not huge, but remember, dollar is the king fiat. Softness in the dollar will be good for gold, it's going to be good for crypto, and it's going to be good for euro. A couple of times I've pointed out it's kind of ironic that Bitcoin, in terms of the environment, prefers euro strength than dollar strength. Of course it does, because it's an alternative to the primary currency, and people shed dollars mostly for the Bitcoin. They don't shed the other currencies near as much, and in fact the primary stable coins are largely dollar-based ones. Okay, so most of you know that. So now we've done the FX sidebar. Let's go back to Bitcoin. Woohoo, back to the cryptos, because you're here for the cryptos. I know that, you know that. So what I've done here, after wiping my face clean, is I've actually done a different chart. And in fact, it was a community member that was fiddling on it. We encourage everyone to do 360 degrees of analysis. Let's go down to a 12-hour so we can squeeze it in and get more of it. And you might feel that looks like the Bitcoin chart, but something is off or slightly different. You might also notice that that head and shoulder risk, which still technically exists on the BTC dollar, is not actually a head and shoulder here. Why would that be? And the trick is in what we are really doing. So we're saying if we are in a Western, particularly debt-based collapse, why don't we divide Bitcoin by the bulk of the Western currencies. Instead of it just being USD, we take the dollar part out. We throw in the fact that there's euros, Swiss francs, a little bit of Japanese yen, pound, etc., etc. And what do we get in terms of the technical footprint out of Bitcoin when we get this? Now, you'll probably feel this looks a lot less bearish for one key reason. That is lower than that. So what we actually have is we have two decent impulses. So back with the TG pink, because it's the color of kings. Is it? I'm not too sure about that. The color of queer folk and others. Nice down leg into there, a little bit of a spiller, and then back up, and there we are, back in the low volatility handle point here. Now the question becomes, do you always look at Bitcoin in terms of dollars? Well, if the dollar becomes part of the story sometimes, which it has been, as you saw, it was incredibly strong. We saw the euro, we showed you a double top at 120, we saw it trade all the way down to 101. That's a, nigh on a 20% move to the downside. And now we're saying it could get a little soft for a while because they want to devalue the debt through the currency, not just through the asset class itself. What you might get is a tailwind rather than a headwind for Bitcoin. And this little low vol period over here could in fact revert to bullish. And when you have an extended period without a break, without any known news events, it's inherently more likely, no guarantees, more likely to be a bullish occasion. So what we're actually looking at here is we are drawing for an upside in Bitcoin. We are drawing for an upside in Bitcoin in terms of the Dixie currency. So that is our low 2. Let's get it on the right place. This is a draw tool that we have inside of our community for even forecasting things that are yet to happen. And we can even change the parameters. I think it will be slightly bigger, and I think that might be a 5.5. I can adjust the parameters of that, and you can see there we get a more symmetrical looking upside setup, which would take you from, remember this is now divided by the dollar index. So it's roughly, the dollar index is roughly around 100. We can 4 or 5. We can check that out exactly soon in a minute. And that gives you a value there. So overall, what is the percentage move for the dollar out of all of this? Well, if it just makes target and doesn't go a segment beyond, you're talking still about 23.4%. 23.4%. It's quite attractive, isn't it? That looks like it's going to be the kind of move that could take you through 120,000 in dollar terms. Now you can go and do the maths if we finalize what the Dixie value is more specifically, and I'm going to leave that one for you to do. But let's go and have a look and grab one particular chart and go dollar index. What is the value right here, right now? Selling off currently. Let's take all the eyes off the lines. Currently trading and selling off at 106, which is exactly what we are seeing in the W bottom on the Euro USD. A little bit less exact to the W bottom, but you can see the grind line there, big sell off. That's been a little bit of a slap in the face over there. You could drop time frames. You'd probably get more detail on this. There's a down leg. You could see this whole up leg. There was the falling wedge, my apologies, that gave the boost to the dollar index right the way up to the 110s. This is quite common that we get a bit of resistance. Last time we called 114. And the milkshakers all went for 140 and everything because of course the dollar was going up strongly, and we said no, you had a target for 114. That's what you made. Let's just remind everybody of that call as well. It was over here on this structure over here, that we had a 114 target, and it was there and there, and it was made. And then you got quite a clear cut pullback. Now that was on a bigger time frame. That was a weekly setup. That was a dollar dominant period. All the people then chased the momentum and started saying 140 and bigger numbers still, 200 in due course. It was peak bullishness of the dollar. But here's the problem: the debt market is no longer being accepted. The debt valuations are going down, and now rates have got so high with that debt valuation going down, it's strangling the consumer. So crypto kiddies, bit of fundamental information for you won't always be familiar with. On Friday, before this particular Friday, that's tomorrow, so over a week ago, the gold market got slammed. The dollar market got tiny bits. The silver market got slammed, all on a major miss on the core retail sales, the strength of the consumer. Retail sales and core retail sales. Expected 0.3 minus 0.4. A major miss. These are big misses. By the way, previously it was 0.7. That got revised down to 0.4. As in, great number first, and then once everyone's forgotten, quietly let it be lower. So we talk about lies, damn lies, and statistics. And that's kind of how it goes. Big misses. Yeah, consumer is more wrecked than people think. Retail is not a big part of this crypto market story right now. It's all about the institutions. The big money is moving the market, and it isn't you or I. So we go back to our Bitcoin scenario and we say, well, a move of 23.4. What if we got the original chart up and we did a 23.4% move? We can get an idea. I need to buy a bit more real estate there. Let's go from where we are, 23.4. If you were to get that level of move, where would you be in terms of Bitcoin? And you would be at the doorstep of 120K, as suggested, 119K. And that's going to come as a surprise to people because they're expecting a head and shoulders. They don't understand that a lengthy armpit 2, which is where you think your head and shoulder is, with very low volatility, is probably not 3 bumps in the road where the middle one is the highest. Despite there having been a lengthy period of pause. Can you stop drawing the measuring tool now? How about you do that for me? Oh, Jesus. Eventually it pisses off. So he's fighting with his machine again. So you had a real level there, a broadening structure, which was highlighting exhaustion. You got slammed. You had a weak attempt to climb again. You got slammed again. Then you climbed again. And then we ended up getting a rising wedge and slammed again. But one thing that did happen is there was no new lows made. You kept getting supported. If I turn on the eyes, you'll see my orange boxes. We warned once of a possible head and shoulder earlier. Look at the number of orange boxes. Once, twice, 3 times. Then the lady and the break. Never happened. Kept supporting. So I know people are going to still want to call the head and shoulder, and it hasn't been removed as a possibility. So we're not saying absolutely, but our bias is actually to bullishness on the longevity of this, the support that is run through this, the low volatility that has gone through it. What you can always do in these situations is also check the volume. Tapering volume is interesting. Tapering volume is actually a loss of interest, but acceptance of the current price value. The other thing that you can do generally, which is interesting as an indicator, is the OBV of volume. And if there is major distribution, you tend to see it in there. And I would say there's no clear case for major distribution. You've actually climbed a little bit off your lows here, even though the price hasn't climbed that much. So what this does is it adds all the red selling days, these where the closes have been down, adds in the green, takes away the reds. So let's say that again because I cocked it up. The green candles, you add the volume in. The red candles, you take it away. And then you get the OBV line. What's going on. Now, if there is really heavy volume on the red candle days and very light on the green supporting days, in other words, not validated with a lot of votes of opinion in the market on green, you get a line that continues to go down. on the basis that generally you're taking more out more often and adding back very little in on the green days. What we've had is a pretty flat period of price performance, and you've actually had a bit of a bottoming and a coming back up. You're actually adding green volume, and it's been higher than the red. So also, the net accumulation or disaccumulation does not support necessarily that you're getting a head and shoulder. It did support some divergence between the highs over here, because you had some super high bullish news over there, and the head. This is higher by price, but not actually by OBV, mainly because you missed these huge green days that were part and parcel of the shoulder. It was more balanced and more even, and in fact it warned you that there might be another period to sell off, which has come. You have not run either of these lows, and despite the price being quite low, close to the support, your OBV is actually creeping slightly away. So it's neutral to mildly positive on both analyses of volume. Okay, hope that was interesting. It's not something we've done before with you, but a little bit of an insight. We go into far further detail in terms of OBV analysis. This is separate data, by the way. This is not an indicator as in a mathematical formula, just crunching price data. Whenever you introduce another piece of data that is not price, it has greater validity. You'll know I don't use price manipulation based data, which is just the primary data, that of price. The best is the chart for that. That's why it's there. And read the chart, read it in depth, look for patterns, look for the things that preempt price moves, which are pattern and volume, which is why we do volume by price, volume histograms, and OBV, which bring in a separate data source. The market typically moves after volume. Volume is a leading indicator, unlike mathematical formulas in price based indicators. So that's all said. Bitcoin, our suspicion is that you're going to see the potential for a 23.4% move, which could be based off weak dollar, a little bit of de-risking, the tariff trade story being milked. It's got nothing to do with tariffs. Nobody's tariffing gold. It's going to push up inflation in the long run. For sure, it's going to increase prices, but I've done more on the market snipe on that. I don't want to get into the weeds here on this particular channel for that. Remember to subscribe and follow the Market Snipe if you want to know more on all the fundamentals of the traditional market. So low volatility, small bump up, maybe a little bit of a rest back, and then we get a breakout move to the top side coming probably in the new week. You would be very lucky to get it this weekend, but it could be possible if we are to be correct. Small risk of a head and shoulder, but that is quickly going to be realized when you start running the lows of the localized support. So you don't have to put stops super far away. You can take a bit of extra risk and say we shouldn't be running that. I would give it a little bit of fat and go somewhere there in all instances. Okay, that's it. But there's more. There's more. You know the adverts. There's more. We're going to talk to you about Bitcoin dominance. And actually, if Bitcoin is going to do 23.4% or just go up and fail. Not every pattern has to perform to target. Let's say it goes up 10 or 15% and gives back 5 or 6, doesn't do the 20%, then chops and churns and kills time and mucks around, stands around, a little bit up, a little bit down, like it has been for quite an extended period. How long have we actually been like this? We haven't been updating you in a bit because there's not been too much to say, but it's literally from here when you got up on this level around 837, what was that in dollar terms? Once you got over the 92, you had the one run up through to 108, you had one to 109. Most of the time you spent building a base here. By the way, before I leave that entirely there, let's show you one last tool. Whenever you are looking at a particular zone, and we've called the area, this area over here, you see where all the orange boxes are, roughly the 92,000. Give us the 92,000 volume by price for this period. And what you're seeing is your point of control, your main price, and you can see I had two dotted lines, dashed lines in there, the 92 and the $100,000, of course. And what you can see is the bulk of the volume by price sits in there. This is 70% going from there to there. But actually, the two key levels of significance that we drew captures. It leaves out the three smallest on the top and the three smallest on the bottom. And by the way, this is the first time I'm doing the volume by price like this. The 92 to 100K actually captures a very large part of the primary volume. You've left a little bit out there, and you've left those three Manhattans out over there. So you're getting the best part of it in there. It's probably a safe call to say knocking on the door 50% of the trade. And where are you right now? Low volatility, but above the point of control, which is the highest horizontal Manhattan of trade points. So there's been a lot of accumulation being stacked on that price level. That's what created that Manhattan there, all the way across. You can see how it's been trading there for quite a lot. So that is building up quite a big base, and it's central. Were it to be a concern for the head and shoulder, you would see more skewing like that to the low end of the 92. Let's redraw it. That was a dog's breakfast. So I would anticipate the volume by price to look more like this, and much bigger, longer ones on the support area of 92. You would have that. Were we clearly really just racing to go up, it would actually be the other way around, and you'd be knocking really hard on the 109s, 108s, 109s. We're not that either. We are middled. So this is a continuation pattern on balance of probabilities. It's a pattern structure where you're largely in the middle, and there is a winding up process to go. You're not actually tapping on the ceiling or leaning hard on the floor. You're in the middle zone. So you found your point of rest, the pregnant belly right there in the middle for now, and you need a winding up, and it'll probably have some degree of news that'll go along with it. So there you go, a little bit of volume by price that we threw in for you. Now, who hasn't been doing so well? We're going to come and fill out. Stay to the end of the video to watch that, by the way. And then the Bitcoin dominance that I started to handle with you that I'm going to go back to now. So if Bitcoin's going to go up, and we are now looking at the inverted chart of Bitcoin dominance on the fortnightly. So there's quite a lot to consume there. So we've gone for 2 weeks time frame, and it's inverted. This was when Bitcoin was king. There wasn't much else out there. It was 99% of the market. Everything else was just absolute garbage or early diamonds in the eye of small tokens. There wasn't too much happening in that space. This was your alt run of 2016-17, peak into the end December, the last day of December 17, first day of January, and then the Bitcoin dominance coming back. Remember, this is inverted. These percentages go higher the more you hear. This is Bitcoin king at the bottom. Let's put the TG pink. For the transgenders are king, the Bitcoin maxis, and then of course there isn't just one token, just like there isn't one internet company, just like there isn't one anything in an environment where there's an entire new industry being spawned, and it's going to be your surveillance crypto digital world. There's going to be plenty. So this is a hammer, which on the inverted chart, remember, points to a reversal in the Bitcoin dominance. This was a harsh sell-off which reasserted immensely the Bitcoin dominance. At that point, at one point, Bitcoin was only 36% of the whole crypto market. It came harshly back to 73%, being most of it. Then it went up not as far as before. It went up to around 40%. So in the next, the alts didn't really have as big a run as they had in 16-17. I said it wasn't a full alt run the last cycle, and you had this table topping event, and then once again when the market turned and began to crash, Bitcoin went down less, therefore gained dominance. And because we've inverted the chart, this is it's going down in dominance. You had a little spill here after that last mini sell-off, and that set up a beautiful hammer that I put in the orange box, Agent Orange. Think of Christine Lagarde. There you go, hammer. And it's a small fortnight that's only just begun now. The current hammer is very, very short by duration. the current candle, my apologies, is very short by duration. So it started on Monday the 17th. We're only 3 days in on a 14-day, remember. So this is a locked candle. That was a big rejection of Bitcoin dominance getting into the mid 60s all the way back to the low 60s. We feel this is a turn. We warned in a previous video this may come, but we said there's chance for one more sell-off. That was around about 2024, somewhere here. We said there's a little bit of a squeeze here. At some point, the Bitcoin dominance is going to turn, but there's probably one more sell-off. That sell-off has taken place to here, and they got a rally. But in actual fact, you got one more. And now you're getting, and it was steeper and more violent, and you got a more absolute rejection. This is a big range Bitcoin dominance candle. There's a difference between 65 all the way up to 60, almost a 5% dominance in that single move rejected all the way back up. So what actually are we saying? Bitcoin up, potentially. A little bit of low volatility, still at a low, you know, RL2, we're wanting a third impulse for an up and over, smaller, more chilled one. Then we get a breakout. So not tomorrow that you break out on Bitcoin, but at the same time, Bitcoin might lead that. So initially this candle goes red and comes a little bit further down, but then it gets rejected back up as the alt dominance starts to assert and Bitcoin dominance begins its journey to the upside, which means less Bitcoin dominance, more alt dominance, in its goal, eventual goal of establishing a big macro upside HVF that will see Bitcoin fall below, you won't like this, maxis, 24%. Okay, that means there's going to be a lot of functional tokens that are doing a lot of things whose market cap will have grown immensely for the utility if we turn out to be correct. So an up leg first now to this kind of a range, followed later by a pullback and eventually the blow off and breakout. Okay, so we're looking for a Bitcoin dominance move to take you from where you are now, around 61%, to the 40s. The low 40s, the mid 40s to low 40s before you have a rest again. And then finally, eventually, which might even be a cycle away, we're big thinkers. These are big time frame charts. This is some way into the future, a major move that will see Bitcoin lose an immense amount of dominance, which will point to a lot of other tokens having grown market cap quicker than Bitcoin. So, who might those altcoins be if that is to happen? Well, in our community, we have a number of ideas. Let me just tell you one that it won't be, who we think it won't be. We actually have a few that we do think it is. Click the link below if you want to find out more. And it isn't just about XRP. We know we've told you about XRP. We know you've told you about XLM. So have a guess in the comments below if you like. Book a call if you want to find out more about the tokens that we think are going to outperform in an alt dominance environment that sees the BTC dominance go from 61 to somewhere in the 40s. There's going to be some alts really killing it. Yes, I do think XRP is one, but I've already told you that. What else could be in an amazing setup that could do well in that time? Here's the one I don't think it will be. Yep, Solana. Some Solana guys are going to be real mad at me right now. So Solana has had a couple of inverted HVFs recently. First in a new trend that pointed to the possibility of even further downside, followed by a flag. In fact, I should draw that first in a new trend one for you as well. You can see I've already drawn one of the others. We should do this in full. There it is. So that's the draw tool working out. Let's actually just put the details box. Let's move it somewhere else. This is, as I say, a draw tool that you would have access to for TradingView, assuming you use it. TradingView use PineScript. That's it. That was it. The first one. Now, when you get the first after a slap in the face, that's a harsh rejection. Where was that harsh rejection? 290 before the 3000. Harsh rejection. Bang, down. Should be in our favorite color. Harsh rejection Then you get the first in a new trend, typically expected to overperform. Yes, it made its target, but did it overperform? Well, it sure did. And it made a second one. Beautiful flat bottomed for an inverted. Lots of selling across the top. You guessed it. Sell off. And now it's come to... So if you're bearish crypto, Solana is probably the one you want to be short. If you're bearish. Still to make the downside target of 152. Don't forget, it was at 290. 290 something. Let's give you the exact value. So the token is not going to be Solana. By the way, this preceded its recent dramas and involvements with various other things. 295. You know the news almost better than me, most of you guys, in terms of what Solana gets up to. They just seem to be involved in all the wrong things. And they don't tend to be... I don't know. It's always been put forward as the thing, and you had Raoul pushing it really hard at one point. I don't know if he still stands by it, but there is a downside target there of 152 still to be made, meaning we should expect a sell. By the way, that clears a legacy funnel, which is bearish for Solana. Yes, it may well rally directly after making its target to the downside, assuming it runs that. Yes, it can have a rally for a bit, but longer term, it is pretty bearish for Solana. This is an underperformer crypto on the time frame in review. Don't forget, at the beginning of the bull market, it was one of the quickest. It was a real ripper. Yep, it was a real ripper. So there you go. Who it won't be is Solana. So Bitcoin up, potentially 23.4% on target. Alts to outperform. Which ones? Book a call below to find out more. You know we like XRP, that's a given. Probably for same applies to XLM, not so specifically, but it's in a similar structure for the upside. Which ones though are we looking at for this current time frame that could move and be outperformers that might actually even be in a small setup of their own? We'll see you on the other side. That's our take. A pretty bullish take generally for crypto, not for Solana. But the alts should start to gain dominance going forward against Bitcoin on a firm Bitcoin that could be supported by the tailwind of a softening dollar for all the reasons I gave you. More details on that on the Market Sniper channel. Thank you for watching. Thank you for liking. We catch you later. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.